Hi, everybody. I'm Jeff Barton, your voice in the mortgage industry, here for the Mortgage Minute. Thanks very much for tuning in. Been a busy last couple of weeks. We've had some family emergencies as well as what's going on politically. It's made life very, very difficult in the mortgage and real estate world. Let's get right to it. On the rates today, we're looking at 3.01 for the 30-year fix, 2.41 for the 15. The FHA loan is at 2.37 and the jumbo is at 3.38. Now, these are all in line with what has been happening over the past 2 or 3 weeks. We've seen mortgage rates and the bond market react a little bit to whether we're going to have a stimulus, we're not going to have a stimulus, what's going to happen in the future, whether politically we're on board with helping consumers through the pandemic or whether we're in a Democrat-Republican fight. So what does this mean for you, the consumer, the people out there trying to get a mortgage? Well, currently, according to what this is, now bonds are trading at, what did it say? 0.769. Now, the trading range for bonds was a little bit lower than that for the last month and a half. So this tells us that, okay, they've got to have a bigger yield in order to get bonds sold. However, it's still traditionally pretty low, which really makes the rates that we're quoting today seem a little bit high. We'll see where it shakes out. But right now, the volatility in the stock market, as well as whether we're going to get stimulus or not, is affecting mortgage interest rates. Housing is on fire, as everybody knows. Now, what does that mean? It means that prices are up 5.5% for the month of July. Now, I know we're in August, September, we're in October, 2 months later, but those are the statistics that have come out just recently. And so what does that tell us all? Of course, that demand is going to be there. If prices are going up, and the reverse is true, right? If prices are going up, the demand is obviously there. And sellers are looking at the end or the middle or the beginning. Where are we in this cycle of boom or bust, especially in the West, where that's much more affected than it is in the Midwest, in the East, where prices seem to have been stabilized and will stabilize a lot longer than they are here in the West. Whether it's in Arizona or up in Washington State, we've got volatility in real estate prices historically, and right now we're on a huge uptick. Rocket Mortgage and United Wholesale Mortgage are both going public. That is also indicative of what's happening in the mortgage market. We'll probably see a $3 trillion market this year. What does that mean to you as the consumer? It means that anybody you're trying to get a loan with is tired. And the market itself is tired, and it's reflected in a couple of things that I wanted to talk about on our radio show this week. And if you want to see our radio show, please tune in to any of the Big 8 podcasts. We certainly are also on YouTube, Jeff Barton, the Mortgage Voice on YouTube, and we're on 5 different radio stations in 3 different states. The program has gained traction quite a bit. Demands on time, energy, money, all of that is really placing us at the forefront of what's going on in the real estate world. It's still good. I think it will last, and we'll see you tomorrow. I'm Jeff Barton for the Mortgage Voice, for the Mortgage Minute, and bye.